Wow, that's going to be some crazy stuff. So, I mean, I think we're already seeing a little bit of the inklings of the depression phase coming into Bitcoin. I think the reason why I don't think we're fully in depression mode yet is because the markets and investors are still hanging their hat on this BlackRock spot ETF. And one of the things I was saying about this ETF is I do think it will create a pop, right? I mean, just like the rumor of it when they first filed, just like the Ripple news, the Grayscale news. But the question I would have, and this could be the backbreaker for crypto in the near term, but to make a bottom. And again, just to be clear, Ben and I are both long-term hugely positive. But what happens if Bitcoin gets that approval for an ETF in October, let's say, and it pops and it doesn't take out the 31,000, 32,000 high? So everyone that I know, and again, I'll flip over to my charts, they're basically hanging their hat on, oh, don't worry, because at some point they'll approve it, and then we're off to new 52-week highs. What happens? I mean, again, what kind of pop are we expecting on that news that a BlackRock spot ETF has been approved? Like, are we really going to see it go above 31,800 here? Or does it stall out prior, and then do we see it kind of retrace back down as that depression phase kind of escalates? And would that add to a depression phase, in fact? I know you're thinking that Ethereum underperforms Bitcoin as dominance kind of increases. I mean,
Right.
do you think that a spot ETF will have an impact on Ethereum as well? I mean, I know didn't they file for a futures? The futures ETF's been filed, I believe, but I don't know. Was it a spot ETF too?
Market volatility persists. The cryptocurrency market is experiencing ongoing volatility with several key developments influencing prices and investor sentiment. SEC faces pressure over spot Bitcoin ETFs. Pressure is mounting on the Securities and Exchange Commission, SEC, from US Congressmen to approve spot Bitcoin exchange-traded funds, ETFs, swiftly. They argue that the SEC's delay in approving these ETFs is unjust. The congressmen cite a recent legal victory by Grayscale Investments as evidence that the SEC's reasoning is flawed. The SEC's decision could open new investment avenues and legitimize the crypto space. Morgan Chase's crypto ban. Morgan Chase's UK retail bank plans to ban customer cryptocurrency transactions from October 16 due to increased fraud and scams. This decision aligns with similar moves by major UK banks. Morgan CEO Jamie Dimon has been critical of cryptocurrencies. SEC's surprise delay of ARK Bitcoin spot ETF. The SEC has surprisingly postponed its decision on the ARK Bitcoin spot ETF to an earlier date than expected, leaving the crypto community speculating about the reasons behind this move. The ARK ETF is seen as a potential bridge between traditional finance and cryptocurrencies. Let's continue our discussion with Gareth Soloway.
I think the key is that, you see bonds bottom first because the bond market is known as being kind of the smarter market. It's the bigger market monetarily, even than the stock market. And so you have a lot of money that will start to understand that the Fed is going to do X, Y, and Z. Maybe they're going to start to loosen. Maybe they're just going to go to the sidelines. And that will cause the bonds to kind of bottom out before the stock market gets that signal and kind of is aware of it. So you're right. Bond market generally leads the stock market. And I think that's what's going on here as we're seeing these yields get up to a level. And I do want to show my chart here because I'm going to be honest, I've been nibbling on TLT just a little bit, kind of accumulating a small position. And the thought process here is that I have the 10-year, and again, keep in mind, folks, this is a swing trade, so I don't know where yields will be in 6 months from now. But I do have a trend line that goes, if we flip even over to my weekly, look at that. Look at this trend line here, and look at how it hit right here and had a big pullback, and we're getting very close to that level around 4.6%. So again, it doesn't necessarily tell us where yield will be in 6 months, but if we were to hit 4.6% in the next few days, I would then be in the camp that probabilities per the chart start to dictate a pullback. You have the Fed where they're basically looking at the economy and the stock market, and then they're looking at kind of the negatives, right? And so they're using this as a kind of a lever to weigh on what's a bigger issue. And right now, the economy is still relatively strong. You have the market still relatively close to their recent highs. And so the Fed has why do they need to be any dovish at all? I mean, the second they are dovish, the market's going to rally mode, right? And they know that. So they have to talk hawkishly to keep this market from going nuts and to kind of get things down. And I think the biggest thing, too, is oil, right? I mean, we know energy prices have been a big pusher of inflation over the last few months, and we're into that scenario here. And the one thing, again, we talked about this level. I think it might have been in last week's No Shill. I was talking about resistance right up here. and we have pulled back. And we're actually, this little sideways chop is actually what's known as a bearish pattern. So I think the Fed would be very happy to see energy prices come down. And I think the biggest old adage is, what's the best fix for high energy prices is high energy prices, right? So the higher they go, the more pressure it puts on the consumer. I hear about people in California paying over $6 a gallon and so forth. So I mean, it's here, but I think the Fed, again, is not at a point where they're nearly panicking. Their fear right now is that inflation will roar back like it did in the 70s and into the 80s, right? Versus, oh my God, the markets are collapsing, the economy's collapsing. That's not the one that's important to them. So if that changes, and I do think, I agree with you, I think that the Fed will end up kind of weakening their stance, lowering rates sooner than people expect. But it's going to take a chart of Apple here. I mean, Apple, incredible. Look at the tight range it was in. I mean, you almost couldn't draw this up. It's so tight. It's almost like it was robotic that it was kept so tight. But then look at when it cracked here. And now you're making a lower high, and we're on the verge. We're not there yet, but here's a low. Do we break this line and make a lower low? And again, once you lose these $1 trillion, $2 trillion, $3 trillion names, very, very hard for this market to go up. Here's Microsoft's chart. Microsoft just kissing this support right here, looking like it's breaking down. But again, notice the high and the lower high, very, very obviously lower highs. Now it's on the borderline of making a lower low. And the only thing I like to point out to people is that a lot of people will tell you, oh, it wasn't just the Magnificent Seven. But in reality, it really was. Because this is the Russell, which doesn't include the Magnificent Seven, and it's 2,000 stocks. So it's our biggest index. That's the mainstream index. The Dow is 30 stocks. The NASDAQ 100 is 100. The S&P is 500. So again, if you look at this chart, look at what the market's done for the past, 6 months, 8 months, whatever it is. Actually, in fact, almost about a year, in fact, a sideways chop. But if you go to the NASDAQ, take a look at the NASDAQ chart, which has the Magnificent Seven, and it basically, has 50% weighting with them. And look at how it rallied up. Now, again, it's starting to roll over because those Magnificent Seven are rolling over. So just really interesting. And the last thing I always like to show people here is just look at the similarities in charts. I'm going to do the weekly because it's easier to see. This was the run up into the dot-com bubble, the pullback, the big bounce, and then what happened after. Here's the run up from COVID, the pullback, the big bounce, and it's almost identical. So kind of cool to see. And, history is one of those things where it doesn't necessarily always repeat, but it often rhymes. So it is important to look back at things.
Cryptocurrency exchange Binance is now accepting new registrations of Belgian users following an interruption caused by regulatory actions against it. In June, the trading platform was ordered to cease providing crypto exchange and custody services in the EU country. Lawyers for Sam Bankman-Fried are making another attempt to have the disgraced FTX founder temporarily released from jail before his October trial, claiming he needs better access to prepare his defense properly. Despite the role it has played in narrowing the financial inclusion gap, the eNaira central bank digital currency still poses a risk of financial stability. In addition to bolstering the financial inclusion rate, the central bank claimed that the CBDC would widen the size and stability of banks' deposit base. Venezuelan authorities found weapons of war, a discotheque pools, a zoo, and even a makeshift Bitcoin mining farm in a raid completed on a national jail. The raid, executed in the Tocoron National Penitentiary Center, located in the Aragua state, mobilized 11,000 military officers to take control of the center. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.